folks. This live stream is brought to you by my sponsor, AAA FX. Now, they're a fully regulated broker in Europe and South Africa, offering Forex indices, commodities, crypto, and over 100 stocks. Now, at AAA FX, you pay no commission on any Forex pair using their ECN Plus account and low commissions on cryptos and stocks. Plus, you can deposit with cash or crypto, get a free VPS with deposits over 5K, and easily integrate the well-known copy trade service Zulu Trade. While you're waiting for the stream to start, go and check them out by clicking the link in the description, comments, or visit AAAFX.com.
Good morning, everyone. How's it going? Hopefully you guys are doing well. Welcome to this live stream, Wednesday, August 17th, 8 in the morning, Eastern Time. Let us know where you guys are from. Put it in the chat. Love to see it. We'll get going here in just a few minutes. We'll start at 8:05 Eastern in 3 minutes. Just wait for people to trickle in. Let's see, what pairs are you guys looking at as well? Send in some pairs as well. We'll probably be talking about those pairs that you send in. We have a lot to go over.
What's everyone looking at this morning? What are you in?
All right, Thailand, Washington, France. How's your trading week been, guys? You guys up, down, break even? You traded any? NZD CAD. Yeah, NZD CAD is beautiful. Talk about that today.
Yep, gave NZD CAD out a couple weeks ago, I think, right, Nate? On the live, that 4-hour up close.
Yeah, 4-hour level of supply, and then we distributed
around 825.
And we had a re-entry yesterday. Hello, everyone. Let's see, we're from France, Washington, Thailand. What else you guys from? What other pairs are you guys trading today? We'll start in a few minutes. We only have 35 people on. I'll wait until we have at least 50.
Everyone enjoying the low volatility of August. Usually the worst month, in my opinion. It's low volatility. A lot of people are on holiday. So you don't typically see, traditional trending wave play.
Cape Town, Ghana, England, Cameroon, Dubai. Awesome. What do you think of Inflation Reduction Act? Yeah, that was just passed a little while ago by President Biden. I honestly think that we're probably going to see further inflation. It's going to get worse before it gets better, to be honest. This is just
I didn't even pay attention to what was in that bill. I don't think there's much that they can do.
Yeah, just decrease medical costs, trying to make the super wealthy pay their fair share and stuff. But it's just a ploy to get us to be like, woohoo. In all reality, they're going to continue to screw us. That's how it works.
I mean, I think the damage is already done in terms of inflation, and now the Fed is scrambling, obviously raising rates at, 75 basis points, every time they meet to really try to wrestle inflation back down to 2%. And so, that could very easily induce a recession by raising rates so rapidly. I don't think that would happen until probably late 23, early 24, but it's on the cards, I think.
Mm-hmm.
That's what they have to do to get inflation down.
Yep.
But would you guys say that we're in a recession right now? I hear a lot of debate on that recently.
So I don't think missing huge trades for pips or taking stop loss. How do you have any idea how to improve? Understanding your stop loss and take profits are just as important as your entries. When people say, oh, I only aim for 10, 15 pip stop losses, I just know that they don't know what they're doing. Every stop loss is going to be different. You have to understand where the banks are getting in and placing your stop accordingly. It's not just a systematic 10, 15 pip every time. So I would, as we go through, the person who asked this question, as we go through these charts today, you'll see where we're placing our stops and why, and I'll go over that. So hopefully that'll help you answer that question. Are we already in a recession? Technically, yes, we are, in my opinion. The public just doesn't really know. The news keeps saying, are we heading into a recession? We're already in one.
2 quarters of negative GDP growth. I believe that's what we have. Now, do we have are we seeing economic pain across the board? In the States, not really. Unemployment is still, relatively low. We would need to see a larger increase in unemployment. I think manufacturing production's up, right? So there's a lot of variables that go into it, right? But as opposed to just the textbook definition.
Mm-hmm.
But the economy is not great. By all means, it's not great. So are we in a, depression, recession? I don't personally see it that way at the moment. I think the worst is yet to come.
70-80% is digested by the market. I think we're going to see a lot more volatility come soon. We have been really in a range-bound market the past few years. So just until we see some more volatility come through, I think we're going to have probably another black swan event here within the next year or two, similar to what we saw through COVID. I don't think it's digested at all yet. I think we'll definitely see a pickup. I don't know when. Why aren't we going through charts? We will in a minute. Just be patient. You guys do DXY? We'll go over DXY. I'll talk about that. I'll go over UJ as well. Awesome. All right. So I think we have good enough people on here, good amount. We're going to get started. I'm going to have Aiden go over his pairs, and then I'll finish off by going through mine.
All right. You want to put it on canvas?
Yep.
I really only have one setup personally for you guys this morning. One second.
You got to unmute yourself, Aiden.
You see my screen?
Yeah, I can see it.
All right, perfect. All right, guys, here's the stuff this morning for me. Euro USD. Obviously, we engulfed the price action of last week. And so, this up close volume last week trading into higher time frame supply, right? This is a significant level on EU, right, of supply. And so traded up into that, took out range liquidity and engulfed to the downside. So I'd really like to see higher time frame continuations. First targets are going to be 10050. Write this down, close candle right here. All right, so intraday, what I'd really like to see is a pop up into, we have 10-minute up close candle here. Right, and this is yesterday's price action where we obviously inefficient move, consolidation, buy to sell, New York session open. Right, and you can see the inefficiency created with this move. So I'd really like to see this filled up in terms of New York open today. Right, and so you could view this as more or less liquidity to be run out, right, while we're simultaneously mitigating for a continuation. Right, and we have perfectly equal lows, right? Obviously, these lows perfectly equal to target, right? And that's just intraday. Obviously, we're looking at 1050 as our next targets, right? So I think that's a really clean setup. I don't necessarily think that, we'll see more of a retracement. I mean, we could, and this would be my secondary level, only because we have obviously demand here where price traded into it, reacted, and broke through, right? We didn't technically get that kind of retest. So if we do bust through the level that I'm looking at initially in here, then I think this is a good secondary POI for, more of a premium to sell into that equal low liquidity, if that makes sense. All right, so, mark these levels off. Obviously, what we want to see on the lower time frames, right, is preferably even create more liquidity here, right? Run up, engineer the liquidity, buy to sell, right? Tap into the POI, break the structure on the lower time frames. You take it on the intraday pullback premium into that liquidity. All right, so I think this is a pretty clean setup in my opinion. I think that the draw is going to be more so trying to attack these equal lows now, right? And so treating any kind of pullbacks as excuses to sell on Euro USD and really across the board on the majors, guys. All right, but looking at this in terms of an RR potential, stop obviously we would look to put it above the sponsor candle from yesterday, the buy to sell, right, where we have the inefficiency. So that would come around 19 pips, and obviously targets 10050 would yield about 1 to 8. Now that's if you decide to place a limit. Obviously limits are always riskier, and we like to always confirm our entries on the lower time frames. Oftentimes what I'll do is place a small limit, right, just in case we have a massive spike and then you don't have an opportunity in terms of a scaled in lower time frame entry. And so I'll place a small position on a sell limit and then scale in to add additional positions once confirming, right? So pretty clean looking setup, I think, here on EU. Again, POI 1, POI 2. See if there's anything else. I mean, Euro GBP I do like as well. If it would load. I don't know why it's not loading. There we go. Euro GBP, guys. All right. Now this one I really like because we're seeing higher time frame and lower time frame alignment, right? In terms of market structure, you can see obviously we're creating those lower lows and lower highs. So market structure is to the downside on the higher time frame on the 4 hour. And then if you scale into the lower time frames, right, what we have here is obviously last week we engineered liquidity with these highs, very choppy price action, right? And here engineering even more liquidity. And what we do is we run the lows first. And I love this model, right? We consolidate, right? And let's just say we're in a bearish market, right? We oftentimes like to see in a sell model, right? Consolidation, you run the lows of the consolidation first, then you run the highs, then you break lower, right? And so in this case, that's what we did. Obviously, we gave out, if you pay attention to my Smart Money Concepts, or excuse me, my Smart Money Sundays video this Sunday, this was the exact level that was given out on the episode for free, right? And in terms of a stop loss, obviously, if you're more conservative, could have gone above the high, but personally, I placed mine above the up close candle here. And even if you just targeted, this old low here, you would have yielded almost 6%, right? So that's the power of Smart Money Concepts and tight stop losses and precise entries, is the risk to reward that comes with it, right? But in terms of the here and now, I think we should be looking at pullbacks as simply excuses to continue to sell this market, right? Why? Because not only is market structure in alignment, higher time frame, right? Looking at the 4 hour, looking at now the 1 hour, lower time frames, but we have a beautiful draw on liquidity, right? We have perfectly equal lows right here in and around 8,340 as our target, right? So even that initial position given out on Sunday, you should have had conviction, right? And I'm still in this, to hold this thing down into equal lows, right? Because they are perfectly engineered equal lows. And once market structure aligns itself, right, to the downside, then your eyes should immediately be attracted to, okay, the pool of liquidity, right? Where is the liquidity, right? If we understand market structure, right, if you understand where the trend is, where price is going, then it's simply a matter of identifying where is the liquidity in the market, right? And if you can find something like perfectly equal lows, then that gives you amazing confidence in targets, right? And so, as well as, continuing to treat moves in the opposite direction as excuses, right, to have more premium to sell into that pool of liquidity, right? And so on EG, I'm just looking at this structure in here, right? Looking at this as a potential trade into demand, trade higher, demand fails, right? Obviously push lower, right? So I'm viewing this as our current trading range in here, right? And simply want excuses, right, for pullbacks into premium, right, for continuations. And as it stands right now, we're obviously trading right in that 61.78.6 kind of golden pocket of premium price, right? So I would be looking for distribution here on the lower time frames, right? Look for that lower time frame buy to sell, right? It looks like we're somewhat consolidating at the moment, so I wouldn't be surprised to see, potentially one more run lower or run higher, and then the break of structure, maybe trading into that 78.6, right? Break of structure, pullback, continuation, tight stop loss can go above the high that was created prior to breaking the lower time frame structure. All right, so really simple, straightforward, I think, here on Euro GBP, because we have such a beautiful looking target. All right, but that's really all I have, guys. I personally only look to trade layup setups. So for me, I'm kind of viewing those as EU and EG at the moment. So I'll yield back to Nate. I know he has probably quite a few that he wants to break down as well. Let's see. Here we go.
All right. Let's see. I'm going to share my screen. Let's see. Make sure you guys can see me and hear me. Can everyone see my screen and hear my voice? Just want to make sure, and then I'll get going. Just drop a yes in the chat, just so I can confirm. All right, cool. Awesome. All right, so we can see this. Let's get right into it. So I'm going to first start off by talking about, I'm actually going to start from the bottom and I'm going to work my way up here. All right, AUD NZD. Now, for those of you who are in our VIP community, you would know about this level here. I will go over this in a minute, but our overall structure that we've been talking about on our live sessions for the past month, I think, has been to the upside, right? We're creating higher highs, higher lows, higher time frame. We swept this liquidity here. Now, the reason why we stopped at 117.50 and just took that liquidity was because of the 2018 high, right? That high right in here from 2018, August 13th. We were approaching that high, so I figured, okay, we're going to go run that liquidity before potentially pushing back to the downside. So we finally did. However, we are still maintaining our bullish structure, if we can see, high, low, high, until we break the most recent low, which is right in here. So if I scale into this level, we can see that this was the manipulative move, the institutionally sponsored volume that swept these lows that came into demand to maintain the structure. We pushed up, we pulled back, failed to make the lower low in the counter trend sequence here, right? And we made the higher high, giving us conviction that, well, we are going to continue long with a higher time frame leg and then go out and take liquidity, which is exactly what we did. However, when price started to create equal lows prior to coming into our last point of demand, where we snagged liquidity to begin with that came into this demand, I thought, okay, maybe we could potentially run this liquidity, maintain our structure, and react off demand, because a higher high, you would naturally expect a higher low for another higher high. So I did send this out to my community. I did talk about this on our VIP daily market breakdown videos. And I did note that 1.0990 was my entry target. So I took a very small position on this. It wasn't my full 1% risk, just because technically we did run higher time frame liquidity. So you could assume, since the overall objective was met, that we could easily make a lower low. However, counter trend, we're still bullish until we close below this low here. So we whipped into it, and now we're seeing as a strong reaction. So if you recall, yesterday, I believe we had news. So yesterday was the 16th. We had, rate statement, press conference, monetary policy for the New Zealand dollar. So if those of you who watched my fundamentals or news breakdown yesterday that I just uploaded to YouTube, you would know that news is just an excuse to push price in the direction it was always meant to go, in 4 different forms: to take liquidity, to fill an imbalance, to continue in price, and I believe, what was the other one? To mitigate. Yeah, that's it. So 4 different ones. In this case, we did 2. We didn't continue because the continuation is to the upside. We swept liquidity, equal lows. That's what the news was here yesterday. And we mitigated. So those were the 2 objectives that news acted as an excuse to do. And now we're starting to push away. So now what I'm thinking could happen, we have a little bit of descending liquidity here. We have this wick that could potentially be filled. So we had that reaction from the level. What this could be right in here is just that repricing, kind of just consolidation, repricing, maybe fill lower time frame imbalance and continue. And if we do get that continuation, break of the counter trend, then this repricing event would act as our new demand to then take another buy position long. All right. So I'm in longs right now. In order to get a re-entry, there's really nothing in here that I'm interested in. I want to see a continuation to the upside. If we get that, then I would see this as sell to buy, reprice, continue. This would act as our demand now. Okay, so that I would look for that pullback to go long. So at this current time, there's no additional setup, but if you got in from the lows here, congratulations. I'm moving my stop to break even or just below this low, just in case we continue. GBP NZD, very similar. So we are currently pulling back higher time frame. If you recall from our prior live sessions on Sunday and Wednesdays that we have every week, you would know that we are looking for pullbacks back up into 1.94 and 1.94236. This is really our last buying volume that swept liquidity these equal highs and all this descending liquidity here that came into a lower time frame supply zone that swept equal lows here on equal highs here on a lower time frame that pushed up into a lower time frame supply zone here that swept liquidity here. So I'm not going to go over all of this. I've already described this on prior live sessions. You can go down to a lower time frame to see it, but we're following the mitigation train very nicely. We're sweeping liquidity, we're making continuations to the downside, mitigating levels. That's what smart money is all about. That's why it's so precise, right? So for the person who asked the question of, about stop losses, let's just say, for instance, we get an entry right in here. Our entry should be where the institutional volume starts, because that's where they're injecting their volatility or their orders into the market to sweep liquidity and mitigate a potential level, which we actually did here. Now, where would you place your stop? If you get in from this level here, now so many people are going to be looking at, I want a 20 pip stop, I want a 30 pip stop. Stop looking at it from a pip standpoint. You need to look at it from a risk to reward standpoint. The reason why the stop loss above this high here, about 110 pips, let's just say, I know it seems like a lot, but it's really not, because GBP NZD pumps pips. The reason why we put it above this level is because when the institutions inject volatility, inject their orders into the market, they're buying price in here. When price rolls over, there is no reason for price, when we come back up to mitigate, to come higher than this level. If we do, then we know this level was never valid to begin with, and now we can be looking for higher highs and a pullback to go long, because now we'd be breaking the structure. But in all reality, looking at the lower time frame concepts, liquidity runs into supply, continuations with lower time frame structure, this should play out. But if we're coming to mitigate, we're getting out of these buys. The banks are getting out of their buy positions. They're breaking even so they can continue with their overall sells. There should be no reason why they come any higher than this high, because at that point, they would just be in drawdown on their shorts, which would make absolutely zero sense. So that's why we put our stop loss above the institutionally sponsored candle. Okay. Now, if you have to do with like imbalances or supply or demand levels, I'm a more conservative trader myself. So let's just say, the sponsored candle was, or let's just say there was no sponsor candle and we were just trading, something like this, right? We broke the counter trend structure. We failed to make the higher high here and we made the lower low. So this acts as our new supply. That was once demand because we reacted off the previous swing point, but failed to make the higher high in the sequence. So I would look to pull back into obviously our sponsored move, but this may not be an actual sponsored candle. It just may be a supply level. In that case, just like Aiden did, he's more of a riskier trader than I am. So he might place his stop loss right above that high. I'm more likely to place my stop above the overall high. It just depends on my risk to reward. You can do either, but don't aim for just an amount of pips. Like, I'm going to put my stop every 20 pips every trade. And I've seen people who do that, and it doesn't make any sense from an actual trading perspective if you actually understand how the markets work. So take profits. We're pushing down into this low. I do think that we will continue lower. So even if you just target the prior low, that's still a 1 to 6. That would meet my rules, because even though it's 110 pip stop loss, it's all about the risk to reward. It's not about the amount of pips. I promise you. You don't make money trading pips. You make money trading risk to reward, your percentages. So that's why people over leverage so much, is because they just place random high lot sizes on trades to try to catch 50, 100 pips, when in all reality, they don't really know what they're doing. So where are we looking to target here? We have equal highs. This is our level that we just talked about. So 1.94 is that psychological level. I want continuations into this high, or this sponsored move, before potential rollovers to the downside. So I want to continue to buy price until we get to this objective. So the most recent, from a structure standpoint, we can see we have higher high, higher low, higher high. We went like this and we swept liquidity and then we made the higher high. So this is very interesting to me. I want to see what's going on a lower time frame. So we can see here, this was a massive liquidity run, sell to buy, that happened yesterday during the news event. So the news acted as the catalyst to sweep sell side liquidity, to take all this liquidity in here, to then continue in the overall direction. So if you would like, this would be a very good level to trade from. 1.9120, that open of that candle, in my opinion, stops would have to go below the low, right? 1.9120, that psychological level, you could probably enter in here, lower time frame demand, just somewhere within this range. That would be good for continuations to go to the upside, right? So now let's check out the risk to reward. Now let's see if it's actually viable. Okay, I got to practice what I preach here. So it's about 143, 144 pips. In this case, this would not be a good risk to reward trade. So if I'm looking to trade this, I would probably, you can't sacrifice stop loss. Your stop has to still go below this low because we technically can trade into this range here. I would just look to aim at, maybe entering maybe in here, or maybe like in this imbalance on a lower time frame, maybe 9.1 or 9.07 or something like that. That would give you that better risk to reward. All right. Now, if you're comfortable with a 1 to 2, then you could definitely enter here, target at 1.94. But I'm not. That's not my rule. So I would not be taking this trade. But I'm just giving you the analysis for it. All right. So that's GBP NZD, AUD CAD. I don't know why I have that level there. AUD CAD, I was hoping that we would push up. There was a lower time frame level of supply in here. Now, we didn't quite push up into it. We actually pushed up into a 6-hour time frame. 6-hour time frame inefficiency. Okay. We had the lower low, the lower high. We swept lower time frame liquidity with this wick coming into a lower time frame level of supply. We made the lower low, pulled back lower high, mitigated that level perfectly before continuing. Lower low, lower high, we filled that imbalance. We can see the imbalance was formed right here between this wick and this wick. We did not quite fill that yet upon this pullback. So that's exactly what happened. We pulled back, we filled the imbalance, we distributed lower time frame, just like on NZD CAD, which I'll talk about in a minute. We distributed discrete higher highs, higher lows, and now we start to break structure and fall. Right. So that's what we were expecting. I talked about this on Sunday's live session. We filled that imbalance, and if we can see, maybe if we go down to like the 15-minute or so, you can look at the VFI. I look at VFI when price is approaching my level of interest and we start to distribute or accumulate. In this case, there was no divergence. Price was going up as much as volume was increasing. Doesn't mean that we can't see an overall retracement or a break of structure. It's just an added confluence. In this case, we didn't have it, but it doesn't mean that we can't see it. In this case, we actually did roll over. So that's why I'm saying, it's just a confluence in your trading divergence. You don't absolutely need it. But my re-entry points, if we get a pullback and, we're just absolutely tanking at this current moment. But if we do get a pullback, back up into our distribution, that could happen maybe next week or something. I'm liking where we started the distribution, 90320. And then I believe it may be this 4-hour test. So what we did on a lower time frame, we pushed down, we reacted off the most recent structure on a lower time frame. We failed to make that higher high, and we made that lower low. And this was just the test of this candle, of the spring here. So we have buying climax, secondary test. We have the spring, which would break structure. So this push up is just filling imbalance and retesting this spring here. So now we're rolling over to the downside. So these two levels would be valid, 9032, 9048.50. But obviously the momentum is strong to the downside. There's no trade at the current moment. NZD CAD. Those of you in VIP, you obviously would have known we took a sell from 8196 and we took a small position from 823. That's where I got in. I just had a little bit above this blue box into that psychological level. So we can see here, just continuing with the trend, just like AUD CAD, we're bearish. Lower low, lower high, lower low. Where did we break the counter trend structure? High, low, failure to make the higher high, lower low. So this is the range in which we need to be looking for pullbacks up into. And this was an unmitigated level of supply. This actually reacted off of our most recent level of demand, but failed to make the higher high, and we rolled over. So this becomes our supply. So that's exactly why we had that reaction where we did. We stopped before coming into this level. Happens a lot. We generate liquidity, relatively equal highs. And finally, we push up into it. Buy to sell, mitigate, fill imbalance, sweep liquidity, lower low. Okay. So now we need to come back up and mitigate where we injected the volume to mitigate this level. So that's why we call it the mitigation trade. Okay, we finally come up into it, and I said, and I verbatim, I said on Sunday's call, because we already pushed up into this level on Friday and the market closed, the market should literally open and fall. And we opened, I think was, let's see, 15th, 14th, 12th. So we opened right here on Sunday. And what did we do? We initially fell, right as I said, right? Because we already came into objective. We were already starting to distribute. We came into the objective already. The only thing left for price to do is to just continue in the right direction, fall. So we opened and fell. We actually broke the structure here. We pulled back, didn't make that higher high, and then we made the lower low. So this institutionally sponsored volume here is where we need to be looking at for pullbacks to continue with our short positions. And in this case, we actually did have divergence. We can see here, as volume was diminishing, price continued to increase. That's just a sign of a potential reversal. I always use VFI as a confluence, or I like to have it as a confluence when price is entering into my supplier demand levels and we're starting to distribute or accumulate if we're coming into demand, right? So this is not a sponsor candle, right? Just because this is the last push up before the rollover doesn't make this a sponsor candle. This candle never swept liquidity. This is just the overall volume that was our last buying volume before the real breakup structure to the downside. So 8196, or you could have gone 82. In that case, you wouldn't have hit your entry. But I just kind of took it off the previous low. So I got a wick entry there, and we are in really good profit. Stops are above the most recent swing point high, right? So that's NZD CAD. I don't really see anything here for re-entry, even on a lower time frame. I mean, what we could be looking at is maybe just an overall pullback, maybe up into, just something in here, maybe up into something in here. But regardless, even if you get an entry right here in imbalance, stops would go above the high. It would still be a decent trade anyways. So just looking for retracements for potential re-entries, but we'll see. There's nothing at the current moment. NZD-JPY. So we haven't come into overall objective. Higher time frame on the daily. We can see here, this black line is our even higher time frame objective that we did react off of. So this huge push to the upside finally ended when we came into objective. We pulled back and then failed to make the higher high in the sequence. And then we rolled over and broke higher time frame structure back to the downside. So we have imbalance here in our last point of supply. Really, this was our last push to the upside before rolling over and breaking the structure. So this becomes our supply level. Around that 88, 89, or 90 region, imbalance formed as well. So that's a good confluence. So now we know that price, when we start to retrace, obviously we're in downtrend here. Then we start to break structure back to the upside, higher time frame. Now we should be looking at coming into objective. That's why it's so important to have higher time frame objectives when trading, because you know exactly where to target, where price is most likely to go. So you can take lower time frame trades at high probability setups into those objective regions. So we're coming up into 88. That is my first take profit. I probably will be holding a little bit more into 89, around that 50% of this supply zone, around that mean threshold. We have more buy side liquidity here, so we are looking to continue. What we did do was we created equal lows. Initially here, this touch and this touch, we also had equal lows in here, but we never pushed down into our daily time frame level of demand. You can see that right in here. Higher high, higher low. Didn't quite make a higher high, but that's okay. We didn't come into this demand in here or here. We finally did here, sweeping these equal lows, sell to buy, coming into that level, mitigating that level. 4-hour time frame, we can see the reaction, 1 touch, 2 touch, and 3 touch. People were buying off the trend line. Whoops, you lose again. Sorry, not sorry. Sell to buy, reprice. That's what we did here, creating that demand. Higher high was formed. So now we've came into lower time frame objective. We've broken structure back to the upside. Now we're looking continuations for continuations higher into our higher time frame objective to sweep buy side liquidity. So lower time frame, we're actually generating more liquidity now. 1 touch, 2 touch, 3, 4, creating that retail trend line that we know is just going to run. So I'm hoping to see a sell to buy, enticing the sellers below this low, sweeping retail stop losses that are placed below this trend line since they're buying off the quote unquote support, coming into our most recent level of demand, higher high, higher low, higher high. This would be that higher low to maintain our structure to fill in balance in here. Also, if we do come a little bit lower than this level, that's okay because we have equal lows in here. And then that 4-hour repricing event, that most recent demand level, right? We could easily come into that and then go, because not only is this the repricing, but it also lines up with where we snag liquidity. You can see this black line, that's where we have the trend line, right? So we took the liquidity, pushed up, and we failed to make the lower low for the continuation, and we made the higher high. So that's why it's our new demand. Supply to demand flip. All right, so that's NZD-JPY, these two levels I'm looking at buys from. USD-JPY, I was originally looking for buys from this area of demand when we were in here, but it's looking like we're just going to go in and attack buy-side liquidity and come up into our objective anyway. So not sure if this is still on the table. We'll have to see if we get the retracement. But what I was looking at in here was sort of this retail head and shoulders. Shoulder, head, and then a little bit of a shoulder here. We swept that low, these lows, and then we broke counter trend structure to the upside. We pulled back and we continued. So if you were buying USD-JPY in here, you probably should still be in profit. But I think it may have been, I don't remember, the 10-hour time frame. Yes, it was. Wow, I can't believe I remember that. So we came down and we swept this low, creating that lower low. So I'm looking for an overall pullback, lower high. Well, you may be thinking, well, we're bullish. Higher high, higher low, higher high, higher low. You're looking for a higher high. Yes and no. There's always a potential that we continue with this lower time frame trend, even though we're on the 10-hour daily time frame. But this is our weekly/monthly time frame objective that we came into, and we push strongly away from it. So that's why I'm thinking we may roll over. So we may actually fail to make a higher high here and actually make a lower low. That's what I would like to see. So we swept this liquidity. During this counter trend pullback, we filled in balance to the T. In doing so, we swept sell side here and sell side here, faking people out of the retail head and shoulders, creating that sell to buy. We broke the counter trend, generated more liquidity in here, equal lows, 8 in the morning, New York session open, sell to buy, manipulation from London and Asian session, coming into our last selling volume. This is the sponsored move right there, because we swept liquidity and mitigated the filled in balance really. But then made the higher high, broke counter trend, swept Asian session lows, London session lows, created that 8 in the morning New York session open sell to buy move. You could have easily bought it from there. Beautiful, beautiful, beautiful trade. But I didn't see that in time. I really didn't, so I can't take credit for it. But that would have been what you'd be looking for. That's how you can apply these concepts. So then we broke counter trend again. Well, not really counter trend. It's just continued the structure. Created a higher high from that level. So I assumed, okay, well, this has, we could mitigate this overall last sell before the buy. That would come in alignment with this mini time frame level of demand. So I was hoping to get that entry, but we never did. We pushed up. However, if we stop now and roll back over, I will still be looking to buy within this level here. That would be our overall demand zone. Okay, stops below the low. I would look to buy at 133.5. That lines up perfectly with our institutionally sponsored demand and selling volume. And that's also a half level or psych level, whatever you want to call it. That's if we don't come up into 136. This is our objective. So what happens when we do this? Is this on the table still? Absolutely not. We should be looking for lower lows because the higher time frame objective had been met. That's how we can read price in market structure. So 136 psych level imbalance fill, really the retest of this market structure here. We also have 136.98, which is an unmitigated 5-minute time frame level of supply that occurred during news on the 27th. I believe that was USD monetary policy or FOMC. It may have been CPI, I'm not sure. But anyways, news acted as the excuse to sweep this prior high, come deeper into our lower time frame supply level, which was within the higher time frame supply level. So we had two entries, one at just the open, 137, stopped above the high, and then one right in here, stops right above there. That was more of a risky trade, but ended up working out for us. And we can see that's why the news created the volatility. It wasn't just a random buy to sell movement because of news. It had a purpose. right? Every move in the market, there's a 100% purpose for. Nothing is just random. So we pushed up, pushed back down. We haven't mitigated that filled imbalance yet. So technically, I would like to see if we do get back up into this level of price, 136.98, looking for sells. So looking for sells here and here. We do have to just be aware that we technically still aren't an uptrend. The dollar is still very strong right now. This push to the downside did come into prior market structure right in here. So we just have to be careful. Technically, we still are bullish, lower time frame, but we did come into that higher time frame objective, which is why I'm like kind of confused. We should be looking for sells because we came into objective, but at the same time, we're still maintaining lower time frame bullish structure. So, we just have to be careful. Use good risk management as always. And I can quickly talk about the dollar index before continuing. Higher time frame, we finally pushed back down into, previous structure. Higher high, higher low. We're looking at breaking structure now, kind of accumulating, coming back down into demand. This is the counter trend. We could break that, and then we could look to pull back and then continue long. So continued dollar strength is what I'm seeing for the time being. I don't like to divulge deep into the dollar index. It just kind of gives me a general overview of where we could go and, the higher time frame direction that we could see on the dollar, which could help with my XXX USD bias. All right. Next, GBP JPY. I'm going to go through this quite quickly because we're kind of running out of time. So with GJ, it's a little confusing because 4-hour time frame, you could kind of classify us as bearish, lower low, lower high, whatever. Pulled back up, swept this high just by a few pips and made the lower low. So the most recent level of supply is right in here because within this counter trend, we have high, low, high, ran the liquidity, low, failed to make the higher high, lower low. So this is our supply, right? That's where we broke structure to make the lower low in the first place. So 164.5 could be that level. We have descending liquidity that we could go and run. So continuations to the upside, at least until 164.5 is expected. So we could just pull back into the most recent lower time frame structure demand, fill that imbalance and continue, or we can have an overall retracement, 161.5 or 161. There's really nothing to play off of here. It's just straight imbalance. I'm just going based upon psych levels. This push into here did react off of that imbalance and 1-hour time frame demand. I did not take a trade from this. The reason why is because technically we're bearish here. We're making lower lows, lower highs, so we shouldn't be looking to buy off of demand. We should be looking only to sell off of supply because that's where market structure is heading. Now, not to say that we can't trade this counter trend long. If we get the reaction from here like we did and the counter trend break, then yeah, there's a setup we can take it long into objective, which is what I'm trying to do. But at this current time, it's just really bullish. And you know how the yen goes. The yen always just, when it goes, it just trickles, just goes. All right, so there's oftentimes not a lot of wave play. But these three levels would be my interested level until 164.5. But other than that, I really don't see much on it. You can look for shorts from 164.5. When I say look for shorts or look for longs, that doesn't mean just go and buy or sell it. You can, but I would prefer confirming it first. Confirming meaning waiting for distribution, maybe waiting for lower time frame breaks of structure. You could place, if you have interested levels like we do here, like for instance, 1, 2, and 3, you could easily place buy limits at these levels, but maybe split up your risk. If you're risking 1%, maybe risk a third here, a third here, a third here, or, not even that, a 0.25%, just in case it does just go to the downside, you only lose what, a quarter, 0.75%. But if you're right, at least you get in at a level, just in case you're unsure as to which level is actually the most responsive one. That's kind of how I work on it. GBP USD, I was really hoping we'd push up into our level. We never did. We're looking for overall pushes to the downside. Dollar is very strong. We did come into our most recent level of supply, higher time frame, lower low, lower high, lower low, lower high. On a lower time frame, we distributed. I know you can't see it. This is the 4-hour, but if we go to a lower time frame, it's distribution schematic. We sprung here, closed below the most recent structure point. This is our most recent level of supply, also has that imbalance. Created the lower low. Naturally, you'd expect a lower high. We came into that supply level, filled the imbalance, had the reaction from it, still maintained our bullish structure, but we failed to make a higher high here. we made a lower high, and we came into this level of supply. We reacted 1 hour time frame. We reacted from it again on a lower time frame, failed to make the higher high here, reacted off of this supply, and we fell, breaking counter trend structure, retraced, filled in balance right in here, pretty much to the T, and then rolled over. So now we're forming equal lows. I'm looking for pullbacks to short. Very, very strong conviction of shorts here. Dollar's strong. We're failing to make higher highs here. Lower time frame, we're breaking structure to the downside. We have equal lows. I'm shorting this all day long. So the reason why I had two levels was because, one, we have imbalance here between this wick and this wick, so just straight selling volume. So just getting back up into premium price to be looking for short, so 1.2160, or this 2 hour level that we have here in which we broke the counter trend structure, pulled back, failed to make a higher high, and made a lower low that on a lower time frame filled in balance right here. This is also an unmitigated level of supply. Just our last buy to sell volume. So either one of these two levels you could definitely place, and we're forming liquidity right now between this high and this high. You know, there's just liquidity to go and take, boom, either here or here, and then fall. So that's what we're looking for on GBP USD. So mark off those two levels. GBP Swiss franc. This one's more counter trend. This is a little more risky because we are in an overall downtrend higher time frame. But I wouldn't mind seeing some form of retracement, like retracement higher time frame into supply, into premium price. This is our last buying volume before the big sell-off, the counter trend break that swept this high here by a few pips. That's the liquidity run. So in order to go short again, I really want to get back up into premium because no one likes to buy at premium or sell at discount. They want to be selling at premium price. So what we did on a lower time frame is we distributed in price. Let me just see if there's any divergence. And there was divergence here. Price shorted off, volume rose. Okay, there's divergence for you. So we had the divergence, and then we had the break of structure to the upside, the impulsive move. So now I'm looking for retracements, an overall retracement to continue to long this. So most recent level of demand is right in here. We also have a lower time frame level of demand in here that failed to make the lower low here in this sequence, right? That actually broke the counter trend structure to the upside. We just never retested it here. We stopped. So this is why I have these two levels as potential entry points. So 1.1434 and then 1.141, I would like to see. GBP CAD. GBP CAD's quite annoying. As you guys know, I'm not going to break this down in full. I've already talked about this so many times. In essence, we're bearish, lower low, lower high. Most recent levels of supply we haven't come back up into. So these are the two objectives that we haven't hit yet. So further continuations up are expected. We accumulated, broke the counter trend to the upside, so we should be looking for buys into our objective region, right? So I'm looking at pushes into our most recent levels of demand. Kind of very similar to GBP Chef in the look of it, right? We swept liquidity, broke counter trend structure, pulled back, failed to push into this, and made another higher high. So these two levels are still valid. I was hoping to see this retail head and shoulders get run, sell to buy, fake out the sellers below the support, take the stop losses of the buyers when trading the trend line, pushing down into either one of these two demand levels and then rising. We took the liquidity, we reacted from it, but we're just kind of consolidating. So these two levels are still valid for me because we're creating, buy side liquidity to run. So if we do get pushes down into that, this is sort of like a skewed head and shoulders here, I guess you can call it, sort of skewed. Obviously, that trend line should be run as well. So buys are still valid from these two levels because the objective has not been met yet. The counter trend has been broken to the upside, so we're counter trend bullish, so looking for buys. But did we come into objective to potentially look for overall sells? No, we have not. So that's why the buys are still in order. That's GBP CAD. Euro CAD, same sort of deal. I talked about this within VIP. I've talked about all of these in VIP, but this was the most recent trade that we actually took. Was this morning, or actually was yesterday. But we can see here higher high, higher low. This higher low swept liquidity, creating that sell to buy. Reprice, continue. Higher high was formed. This becomes the demand. 1 hour time frame. We have that doji 1, 2, 3 pin pattern, that demand level there. What else? shoulder, head, shoulder, fake out, continue. Happens all the time, guys. If you're trading retail, I would highly recommend not. But anyways, what is retail doing in here? Obviously, they're looking to sell or buy upon this trend line, 1 touch, 2 touch, 3, right? They're trying to buy, which is why price probably pushed up a little bit. But overall, they're looking for breaks below the neckline to short. They short upon the break here. They're in a little bit of profit. Nope, right back to the upside. They get scared. They take out their positions and a loss. If they're brave enough to hold, they're in a little bit more profit because what are they doing again? Break and retest of this trend line. Oh my gosh, are they dumb? Taking their stop losses again. That's why we push down. Break and retest of the trend line. Come on, guys, don't do that. Go right back to the upside. That's why I buy it right there. So they lose, I win. That's how it works. That's why smart money always trumps retail, because retail, there's no applicable reason or no valid reason why price moves in the way retail trades. There's no valid reason. Smart money is smart money because that's exactly how the market actually moves. So that's why it works out. But anyways, we come into demand and we react. I'm hoping we have the continuation. We have the buy side liquidity here. I don't really see a re-entry at this current time. So guys in VIP, I will update you if I see anything else. But currently, just looking at making that third drive to the upside, we can see 1 drive, 2 drive, and then looking for that third drive. All right. So that's what I'm looking for. Euro GBP, I know Aiden already talked about this. So obviously, you know, we're overall bearish, but we have 2 regions of price. Obviously, the one on the 20-minute time frame, he called out to perfection on Smart Money Sundays a couple days ago, was right in here, which swept liquidity, buy to sell, reprice, continue. This push up did not fill this imbalance, but we created supply in here as well upon this engulfing candle. So that's why I have these 2 levels for potential entries or not re-entries, but adding additional positions to short the market. All right, so these 2 levels roll over to the downside is what we expect. However, I will say this. We technically are not really up into premium price yet on the higher time frame, lower low, lower high, lower low. We do have sell side liquidity, these equal lows to target. So we know we're going short overall. But could this be just an overall pullback for another higher high? In this case, I'll still be looking to short here. But yes, we could see a potential higher high, maybe coming up into this level of supply or filling the imbalance that was created right here, where we initially swept these triple equal highs with news, buy to sell, sweep liquidity at the right time of day, 8 in the morning, obviously New York session open, perfect manipulation time, coming up into our supply. News event happens on purpose, not just random. So these 2 levels are still technically valid for me. So if we make a higher high overall, because we kind of filled imbalance in here, that is a possibility. And in that case, I'll still be looking to short from this level and the imbalance in here. Right? But you can still look to short this, because even if you do, say we short it here and clone this really quick and we short it, here, where's our original level? Right there. Place our stops above the high here and then the high here. Gosh, why am I messing up? This is not pretty, but oh well. Top here, targets, our objective is 8.32790. Even if you lose these, I would treat this as 1 trade. So 0.5% here, 0.5% here. So you lose 1% overall if you lost, but you'd make 5%, or since you're splitting it in half, 2.5%. And on this one, half of 15, so 7.5% here. So the risk to reward is still there. Even if you lose this trade, fine. You place another one right in here on this supply. You lose that one, you place another one here. So all in all, you'd lose 3%, but you're having the possibility of winning this trade right off the bat, or this trade here, just call it right there, stops above the high. Overall target is that. So 1 to 6, I'm going to clone this again. Imbalance fills right there, stops above this high. Take profits right there. 1 to 4.6, let's call it 1 to 5. Doesn't matter which one works out. Even if this one doesn't work out, this one doesn't work out, and this one doesn't work out, but this one does, you're still making more money in the long run, because that 4.64% would cover your losses from this one and these 2 trades. That's why it's okay if you can, quote unquote, confirm it. Obviously, confirmation doesn't mean 100%. just highly probable zones, just like we see here, reaction off supply, buy to sell, failure to make the higher high, broke to the downside. We're looking for overall shorts anyways. We swept liquidity. Objective is down here, sell side liquidity. We have confluence to take it short. So why not sell from these levels? Especially because we have the risk to reward. Even if you lose these 2 trades and this trade, but you win this one, you're still making more and covering all your losses. So that's why I'm saying don't try to pick and choose which one is actually valid. Just trade it. If you have conviction for a trade, take the trade as long as you have good risk to reward. I hope you understand what I'm saying there. 2 more and then I'm done. Promise. Okay, so it is 9 o'clock. I'm going to stay on for about 15 more minutes. So higher time frame, we are bullish on CAD JPY. You can just see that with the current trend. Most recent swing to the downside, swept liquidity. We swept this low and then pushed to the upside, looking for an overall higher high. Higher high, higher low, higher high. This is a higher low because it's just a liquidity run. It's not a break of structure because we're bullish. It's just a liquidity run. So now we're looking for a higher high now with the sequence. So now lower time frame, sweep the liquidity, push up. What do we form? Retail, head and shoulders. Boom. 1 touch, 2 touch, 3 touch, 4 touch. And with that 4th touch, you can see there was a little bit of a reaction because retail was buying in there. So attract sellers below the neckline, take the stops of the buyers on the trend line, right? Come into a lower time frame, previous supply, now demand. Think about this, guys. When we push down, this is supply. Push down again, pull back, this is supply. Push down, pull back, this becomes supply. Push down, pull back, break through supply. We never retested it. That's exactly why price ended up pulling back to where it did. Yes, it filled in balance, but why at that exact price? Not only is it 102.6, which is a round figure psychological level, but it's also that prior supply that it broke through after sweeping liquidity that never retested. So the supply flips to demand. Boom, right there. Track the sellers, then go. We take the stop to the retail traders. So I was really hoping that we would get a pullback down into our most recent demand zones. We have one in here. We have one in here. But we're still looking to push up. If we just continue like this, then maybe a pullback into imbalance would work, somewhere in there to go long. But if we do retrace now, I will be looking for longs from these 2 levels. All right. So that's what I'm looking for on CAD JPY. Very similar to AUD JPY. We're having a pullback now. We have sell side liquidity to take. Higher time frame, we did push into a daily time frame demand level. We made the higher high, pulled back, swept liquidity. We have buy side liquidity here. Sell to buy, reprice, continue. Similar to NZD JPY. Retest that demand zone, make a higher high. So now I'm just simply looking for a retracement into most recent structure. And it's this demand zone right in here with imbalance. Okay, so about 93, I'll call it 93 psychological level, just to sweep these equal lows and come into this level. Now, I'm not going to say that this will hold 100%. This we could bust through and come deeper and have an overall pullback. We shouldn't come below here because this is the higher time frame objective that we hit. But we could come down, fill and balance more. That's a potential. Is a potential. So I still will be looking for longs, but our most recent level would be here. So either, I would recommend probably using a lot less risk. This isn't, a layup setup that we usually get, but the confluence is there for a trade. I'm just going to risk probably 0.5% just to keep myself safe because it's not the best trade in the world. Alternatively, you could do this. Wait for the counter trend to form. Maybe wait for confirmation. Liquidity forms. I don't know. You sweep liquidity here, sell to buy, break counter trend. There's your confirmation. Now you can take it long. That would be a better trade to take than just taking it right off this level. But you could. I mean, it's still valid. So guys, that is all I have for you today. Hopefully you guys learned something. I'm going to take some questions now. Guys, if you want to learn how to do this every single solitary day, please feel free to go to our website, www.arielfxtrading.com. Book a free call. Just see if it's the right fit for you, and to see if you're the right fit for us, because we do take very specific people. We want to make sure that you're very serious and want to do this full time because we want to be taking you to that full-time funded trader status. That's our ultimate goal within our program here. So let's see, guys. I'm sorry I did not see all of the comments and questions throughout my screen share because it just wasn't visible for me. Can you go through GBP USD? I did, went over that. NASDAQ, sorry guys, I don't trade indices. I don't trade cryptos. I don't trade commodities. I only trade Forex. So please don't ask me for gold, US 30, NASDAQ, anything. So I stick to Forex. Let me add Aiden back to the stream. You can hop on if he wants. Let's see. How do you choose between sponsored moves or sponsored candles? Well, it depends. Like, for instance, let me go back to canvas mode. I'll share my screen here very quickly. There could be equal highs. That price has a bunch of candles pushing up into, we take it and then we break lower low. Doesn't mean this is the sponsor candle. This candle did not sweep liquidity. This move swept liquidity. So I probably look to just take a trade anywhere within this range here because this is the institutionally sponsored buying volume that swept liquidity. Alternatively, if you actually have a candle that does sweep liquidity like Chef JPY on the 1 hour here, this candle actually swept the liquidity, equal highs coming into supply. You could have taken it off of the overall sponsored move, which started here. This is the start of the last buying volume. That's definitely valid. But looking to where the candle actually took liquidity, this is a valid candle. Very violent move, 0 to no wick. We get in, we get out. That's what happens. That's why we, entered right where we did. That's where it mitigated. And in the process, swept liquidity as well. So hopefully that answers your question. Let's see what else we have. So you're saying don't enter on confirmation. I never said that. I usually always look for confirmations. If I can validate a supply and demand level, then I don't need confirmations because that's confirmation in and of itself. Risk-wise, risk is really subjective to you. I use perfect risk management every time, so there's no such thing as unsafe risk for me. But to answer your question, I do enter off of supply and demand levels, or I guess you can call them order blocks, since that's what people know. Saying you don't enter on I do sometimes. It just depends on the setups. It's a good question. It just depends on the setup. It's kind of hard to explain. It's discussed deeply in our community. How do you decide whether to enter on order blocks versus order flow? Sponsor candle versus sponsor move. Yeah, I kind of just went over that. Get MentFX on your show. Yeah, MentFX is good. He's really good. Euro USD. Went over a Euro USD. Sorry, I don't really trade USD Mexican peso. It's not really one of my favorite pairs. The pairs that I go over every single Wednesday and Sunday, those are the pairs that I like the most because they wave the most. That's why I like Forex better. Let's see. Regarding the Wyckoff schematic, how do you know that it will hold if some values like the AR LPS is missing? Okay, good question. So there's different forms of Wyckoff. There's different forms of distribution, accumulation. I like to keep it as simple as possible. So here's what I mean. Hopefully this will answer your question. So when we're approaching, let's just say this level here. Actually, let me go to NZD-CAD. That was a good example. Perfect distribution. So, I don't really care about all the little terms in here that people use. What I look for is has my objective been met? Has it come into that supply region? Is it breaking? Is the momentum shifting to the downside, right? I'm not just going to sell it right here because I think the distribution is going to hold. I wait for confirmation. So I wait for the distribution to be finished. I wait for that break of structure. Yeah, you could pull back, but I like to wait for that really strong shift in overall momentum and then look to take it off of the retest of our supply zone, because this was the high that failed to make the higher high in this overall sequence, right? We failed in validated demand, and then that creates the demand to supply flip. This is the supply, and then I just get in here. So I'm not a master of Wyckoff. So I can't really tell you. Our Wyckoff course was created by a professional Wyckoff trader within our group. So he's not on today, but he could definitely help you with that. I just like to make it easy. Are we distributing, accumulating in the region of price? Have we broken structure back to the downside? Is there volume price divergence? In this case, there was, because we saw that price was continuing to climb as volume was diminishing, right? So that's just the confluences I have to take a short trade here. Hopefully that answers a part of your question. I'm not the best at explaining Wyckoff, so yeah, hard to do that. I realize you didn't mention anything about inducement. Inducement's the same thing as liquidity, really. You're inducing liquidity, you're purging liquidity. Usually before you come into supplier demand levels, liquidity is oftentimes created. It's induced. So it's, you take that liquidity coming into that level before moving away. It's just different terms for it. Do you think trading breakouts are safe? No, definitely not. Think about it. What is a breakout? A breakout is a breakout of a prior high or low, but that's what every retail trader is doing. If you're trading out of a range, for instance, an Asian range high, price is going to push up, entice those breakout traders, and then push right back to the downside, most likely. Vice versa for a buy setup. It would sell off, take a previous swing low, and then move right back to the upside. They're enticing you to take that position. I definitely wait for smart money confirmations. So if the breakout is valid, meaning if you're looking to buy and it breaks out to the upside, I wait for price to have more continuation, not just one candle that closed above a specific level. I wait to see an actual strong push. So here's what I mean. Because you think about it, when people are trading breakouts, there's a range, right? Price is trading in this range. Price will break out. People want to buy. They're breaking resistance. Oh, we think it's going to go long now. Well, it easily could just be a liquidity run, buy to sell. And that's where we take our trade off the sponsor candle. So retail loses and then we win. Just like the Swiss franc Japanese yen trade, right? So on the 1 hour here, that's exactly what happened. This is the breakout of the resistance. You push up. Now, the only way I would want to buy this is if we sustained above it. If we sustained and then we started to trickle back and pull back, then if there's some sort of smart money play that meets my rules to look for a buy, then I will. But until that's the case, breakouts are oftentimes fake outs because we have to understand how the market moves and we have to understand liquidity and market structure and everything. Oftentimes when you see equal highs or equal lows and price goes like this, I would definitely wait. It could easily be a liquidity run from the banks and then it pushed right back down. In this case, it was. So that's where we understand the clues they leave behind for us to get into the market right here. Perfectly. Very precise. And stops will go above the high, obviously. So hopefully that makes sense. What other concepts, questions do you guys have? Anything you're struggling with? Doesn't have to be within trading. Could be like psychology in your personal life. I'm here to help you guys any way that I can. Next live session will be Sunday at 2 p.m. Eastern time. We're going to be breaking down charts to go over for the upcoming trading week.
Make sure you guys tune into Smart Money Sundays on our channel as well. If you aren't able to make the live session, I'll be dropping Smart Money Sundays on our channel, Ariel Fx. Nate can drop it in the chat. Every Sunday I post that about 30-minute long video, kind of breaking down higher time frame where I'm expecting markets to head throughout the week. So always a lot of value to be had over the weekend in terms of assisting you in preparation for the week ahead. I can't stress enough how important it is to be prepared on the weekends coming into the trading week, right? That will allow you to focus on the here and now, like the current price action, because you did your due diligence over the weekend, right? And already understand what levels we're likely going to trade into. So check that out on our channel every single week.
Yep, definitely. Definitely really good value. How to deal with losing streaks. Oh, that's a good question. We're coming out with a psychology course here in the next few weeks that's really going to break down everything you need to know about really everything psychology related. But to answer your question, you have to understand that you will lose. People lose, they go on losing streaks. I go on losing streaks on occasion, right? But we have to be able to manage our emotions correctly and not, because losing streaks, what do they lead into? They lead into anger. You want to win the next trade because you want to take away all those losses and make that money back. So you over leverage, you over trade, you don't use your rules or your trading plan. Treat every single trade independently from one another, right? So losing streaks occur, but if you manage them properly and you can use good risk management and you're using your trading plan and meeting your rules every time and waiting for really good trade setups and not forcing anything, then that's just going to turn right back around and hit you with a winning streak. So, and obviously if you have good risk to reward, that's going to turn into an overall net profit. So it's very tough for traders. Many people don't know how to properly deal with it, and they go about it the wrong way. And it just leads to blown accounts, which is why the statistic has been proven 95 to 99% of traders fail in the long run.
Yeah, so, and a habit that I built a while back that I still even adhere to when it happens is I decided that if I ever lost 2 trades in one day, I'd walk away from the computer. Straight up, close the laptop, walk away, go outside, work out, do something else. Right? That will, that having a rules-based system that you must remain disciplined to is critical for your success in trading and maintaining the proper psychology. Right? So even now, if I ever lose 2 trades in one day, I will walk away. I won't come back. I won't touch it. I'll come back the next day. But, there's a lot of emotions involved in trading, and, you have to be able to mitigate it as much as possible.
Yep, definitely. Do I trade gold? Don't. I advise for people who try and trade for a living. Trading for a living is very difficult to do. And it takes time. It's not something that, because many people, what they'll do is they go on a winning streak and think, oh, I'm good enough to trade for a living. I'm going to quit my job and blah, 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 blah. There's so many things that go into it. What you have to use risk management first and foremost. So in order to do that, you can't over leverage. You have to use good risk management, a proper, lot size to use depending on your account balance. You also have to figure out, okay, what are my monthly expenses? Is my monthly return on my account using good risk management going to pay for my expenses on a month-to-month basis? What happens if I don't hit my target? Then what? How am I going to pay my bills? So there's a lot of things that go into it. I would just say if you're consistent for at least 12 months, then you can probably consider going full-time. But if you're not, don't risk it. It's not worth it because you're just going to end up gambling your money away. So so this is what we do. This is what one of our goals are, because we were originally a signal service company, and that just created way too much dependency and not enough self-sufficiency in traders. So we wanted to shift that to a more, educational, like rooting you in that foundation of education, proper education, and then working with you to develop these skills over time, because obviously nothing is instantaneous. Get rich quick just doesn't work. But over time, getting you to that, where your goals are. If it's full-time, if it's funded, whatever it is, we work with you until you reach those goals. That is our overall objective. That's our mission within Ariel Fx. So I would suggest finding a mentor. It doesn't have to be me. Finding someone who is legitimate, that trades very similarly to you, that you can resonate with, and working with them. That's why we, created Ariel Fx, is to help people learn it. So, if that's, and this goes for anyone, if you're interested in what I just said, feel free to book a call. We can ask questions. We can talk about what you need and see if we're the right fit. And if we're not, then we know that, and you won't waste your time joining. But if it is a good fit for you, then we'd be happy to extend that invitation for that personalized mentorship. Because in all reality, you can't do trading as a hobby. You can't. You either have to be all in or not. Because if you're doing it as a hobby, like here and there, you're just going to end up losing. You have to treat it as a business. You have to treat it as a, something that you want to do full time. You have to be passionate about it.
Professional endeavor.
Yeah.
And there's not a lot of professionals in this industry.
Nope, not at all. That's another thing. Fake gurus. Oh my gosh. Please do due diligence, guys. When people ask for money, when people are selling something that's ridiculous, that doesn't make sense, it's probably fake. Just please do your due diligence out there. There's so many people who are scammers. Can't hit the bell on your channel for some reason. I'm not quite sure what you mean. The bell on our YouTube?
Subscription button?
Maybe you're already subscribed. I'm not sure. It's kind of odd. I would just refresh the page maybe. So grateful that I found you guys. Yeah, thank you guys. I appreciate it. This is all free for you. All of it. I don't make any money doing this.
We have a whole series on Trading Nut channel, video series as well, podcast. We also have a bunch of series on our channel. So tons of value that's out there for free.
We have actually started an investment fund, almost like a hedge fund, but for algorithmic trading. That's been going phenomenally well. And Cam wanted to talk about that as a podcast. So that podcast is going to be released probably this weekend. I would highly recommend you tune in, especially those of you who use algorithms or expert advisors. Could definitely be some value. You get to see, kind of that retail mindset behind algorithmic trading and why a lot of people fail with it. And then going into the differences between retail algos and professionally coded like investment fund algorithms. So, like many people know, one of our algorithms we've been working on it for the past, I think 14, 18 months. We just wanted to be different and more of a professionally planned and coded algorithm rather than these stupid MQL5 ones that blow your account every week. Ridiculous. But yeah, stay tuned for that podcast. It's going to be awesome. All right. Any other questions, guys? Anything else for me today? Do you think there are smart money algo? Yes, we have a smart money algo. Everything that we teach, we have put into code for an algorithm. It is awesome. And that's something that we just have on in the background. We don't even touch it. We let it make passive income for ourselves as we're making active, income with our manual trading. So it's just good for that passive income, which is, many people don't have that these days. But yeah, guys, definitely check out the YouTube that we have. We have a whole Smart Money Concept series. We have a whole series on Trading Nut. I'm sure you can find many videos on us. But if you're looking to take it a step further and have more of that in-depth approach that we don't talk about during, our free stuff, feel free to book a call to see if it's the right fit for you. And we can definitely look at planning a way to definitely hit your goals. So that's our ultimate goal. But thank you guys so much. We're going to sign off here. Stay tuned for that podcast that will be released soon. And that live session that we'll have Sunday at 2 p.m. Eastern time. Yeah, Austin. Yeah, Austin's a part of it. Like I'm seeing so far. Yeah. Awesome. Thanks, guys.
Thanks, everyone. Have a good week.
Take care.